over the cross rates for their currency.
Correct.
So isn't it fair to say that the currency union that's really working is the U.S.-China currency union?
No, I disagree with that. I think that the U.S.-China currency union is actually pretty dysfunctional right now. You're right. China has a closed capital account. They maintain very strict control of the relationship with the dollar. But as I described, the Fed made them cry uncle. The Fed forced them to revalue the yuan upward by printing so many dollars that inflation began to break out in China. I think the Chinese will now repeg, and that'll be round 2 or round 3. But by the way, the Chinese, you're right, they don't want an open capital account. The pool of investable assets in yuan is very thin. That's the difference, I'm sure you know, between a trade currency and a reserve currency. For trade currency, I can use bottle caps or baseball cards. It just means we keep a bilateral score and we settle up once a year. But for reserve currency, you need stuff to invest in because it's a form of savings. So you need a deep liquid bond market, which the Chinese don't have. But correct, an art market where they're neither deep nor liquid, but they're interesting, and it's a way for the Chinese to invest. By the way, one of the untold stories, not well advertised stories, there's a lot of flight capital coming out of China right now. I was down in Melbourne, actually as part of the Melbourne, Australia, as part of the book tour, and one of my colleagues came to me and said there was a Shanghai beer billionaire, you know, the Bush family of Shanghai. Person flew to Sydney, got a driver, went out, looked at a vineyard, snapped his fingers, bought it just like that for $30 million and flew back to Shanghai. They're getting the money. The richest people in China are getting their money out one way or the other because they understand the vulnerabilities over there. But China will seek reserve currency status without opening their capital account through the back door by becoming part of the SDR basket. Right now they're 0% of the SDR, but the IMF Executive Board has the ability to change the components from time to time, and they will. So part of the way we're going to diminish and devalue the dollar in world economic affairs is to reduce the dollar component of the SDR, increase the Chinese yuan component, and so everyone will, I say everyone, multinational corporations, oil pricing, settlement of balance of payments, the things that really matter in the international monetary system, in this vision would be conducted in SDRs, which would be, and there would be a liquid deep market in SDR-denominated bonds led by the IMF, which is leveraging its balance sheet for the first time in history. But you would dial up the yuan component, so yuan would play a bigger role without an open capital account. By the way, the U.S. has committed a $100 billion line of credit to the IMF. This was slipped in by Barney Frank in, let's see, a defense appropriation bill in 2009. So if the executive committee of the IMF calls up the Treasury and says we'd like to take down the $100 billion, the Treasury is committed to that. That loan facility is already in place. Now, what's interesting about that, when the IMF takes $100 billion from the Treasury, they give them a note. The note's not denominated in dollars; it's denominated in SDRs. And it has maturity, but there's no fixed rate for the maturity. So at the end, when the note matures, the IMF pays back the amount of dollars based on the dollar SDR exchange rate at the time, not a fixed rate, which means that the Treasury is shorting the dollar because since the dollar is not 100% of the SDR, the weaker the dollar gets, the more dollars you're going to get back to make up a fixed amount of SDR. So we have the spectacle of the United States Treasury shorting its own currency.
Yes, person right,
yes, sir.
Right here.
Hi, I'm Brian Cohen. I'm interested to hear your perspective on the theory that China has a different focus as far as where the West and the United States is focused on currency wars. China is using it as part of their strategy to focus on a resource war and accumulate as much resources as they can right now under the status quo with the long-term perspective that to keep their people under control, it's not unemployment, it's more having the resources for their population, and under the status quo, they can accumulate half of the world's resources in steel and coal, et cetera, as well as increase their gold holdings, and then eventually, when the dollar weakens, when the dollar loses its reserve status, China's currency will be that much stronger to buy resources more cheap in the future.
The natural resource play and the dollar play are very closely linked. So I think I'm going to answer the question without addressing the expanded strategic version that you laid out, I will say it's absolutely the case that China is trying to get out of dollars into hard assets of various kinds. Now, this actually does not involve dumping the treasury bills that they've got. Remember, they're still running trade surpluses, so they can keep what they've got, but when the incremental money comes in, when the new money comes in, instead of buying more treasury bills, they can diversify their portfolio. By the way, another reason I expect the euro to get stronger, I mentioned the fact that the U.S. wants a cheap dollar, so we have ways of getting what we want, and using the swap. The swap lines are our leverage on Europe to make sure the currency, that they maintain a strong currency. But beyond that, China will come in and engage in an enormous amount of direct foreign investment in Europe and buy the European sovereign bonds. They don't want to be the suckers. They don't want to do that, at the first sign of trouble. But once they see Europe get its act together, which they are, and I have a lot of confidence in this new European treaty. By the way, I think Angela Merkel is the only head of state who really understands all this. I think it's because she's a scientist, not an economist. But no, I'm serious. I think she understands the scientific foundations for what we're talking about. But as that progresses, the Chinese will be more and more willing to invest in Europe. They're going to get a lot of stuff they wanted for a long time, but were denied. Critical infrastructure, ports, airports, roads, railroads, other forms of infrastructure, defense technology, computer technology, because the Europeans need the money. And so this is a way for Europe to refloat its economy, for China to diversify away from dollars into euros. But beyond that, the hard asset play is absolutely critical. China has gone from back in the pack to being the #1 gold-producing country in the world in the last 4 years. They produce over 300 tons a year, all of which stays in China, some of which goes on sale to satisfy domestic demand, but the rest of it goes to the central bank, very non-transparently. You can infer some of this, but it's kind of hard to know exactly what they have. The other thing the Chinese did is they acquired 500 tons of gold covertly using their military and intelligence assets. In 2009, prior to 2009, they officially had 500 tons of gold. In 2009, they announced that they had acquired over 500 tons of gold, so the new number, I think, is 1,054 tons. They didn't buy the 500 tons overnight. They bought it over 4 years. They just didn't tell anybody, and they kind of kept it off the books and then booked it in the central bank. So they're proceeding to buy more gold, mine more gold, get all the gold they can, buy gold assets in in Africa. One of the things they do, by the way, is they buy mines, and they do royalty agreements where your return on your investment is the actual output, not a check. And so they'll ship the doré, it's like 90% gold, or even forms of ore, to China for refinement and conversion into 9999 pure gold. But what that does is it bypasses the London market. So it's not only non-transparent, but mitigates the price impact. So they're going for gold natural resources in a big way. So you don't have to speculate that there's an end game to defeat the United States. It's sufficient to say that they're doing everything they can to diversify into hard assets.
I want to thank you for enriching our understanding on this subject. Thank you very much.
Thank you.
And I know there are still many questions, so I invite you to continue the conversation and over a glass of wine.
Great.
So thank you.
Thank you very much.
Thank you. That was great. That was really great. So we have a table up there if you want to.
Great. Hi. Thank you very much. Jim Rickards. Nice to meet you. Hi, Ann. How are you?